In today's Smart Money, the clock is ticking on our current tax rates. What moves should you think about making to help take advantage of low tax rates before they're gone? Our financial contributor, Brian Mirau of Mirau Capital Management, is here. Brian, hard to believe, but the 2017 Tax Cuts and Jobs Act is now about 6 years old. We're just a few years away from when those tax cuts are set to expire at the end of 2025. So what is your reaction to how close we are to that deadline?
Well, Mark, you know, time sure does go fast, and we're getting close to tax increases. Make no mistake about it, you know, unless something changes between now and then, come 2025, taxes are going up. This is when the sunset provision kicks in under the current tax law, and there's no better time to prepare for tax changes than right now. There are many strategies available to help you prepare for rate increases.
So how do you talk to clients about the possibility of tax increases in the near future?
Well, Mark, when it comes to tax planning, you always have to have a forward-looking tax strategy. You know, taxes are necessary for our country to function, but we have to be as efficient as possible with our taxes. I advise on strategies like Roth conversions and how that could be the difference in thousands of dollars in your future retirement picture. And it's also especially important to know how your taxes are changing and if you're in retirement or nearing retirement. You not only have to be investment diversified, but you also have to have tax diversification as well. One of the biggest challenges that we see in working with our clients are the required minimum distributions. I call this forced taxation. And if not done correctly, the IRS is going to impose a penalty on you.
Brian, what kind of questions do people have about taxes impacting their retirement?
Well, Mark, I get questions on everything from taxes on Social Security to investment accounts. You know, many people think their taxes are going to be going down in retirement because they're going to be receiving less income. This may be true for some people, but most of the folks we talk to and visit with, they do not want to reduce their standard of living the day they retire. Therefore, their income is not necessarily reduced as expected. And if your income exceeds a certain limit, it can cause you to pay taxes on your Social Security, which has already been taxed once, and now you're being taxed on it again. You know, improper tax planning can also cause you to have a Medicare cost adjustment, which is simply more money out of your pocket on a monthly basis. Now, according to a study, Mark, by the Employee Benefits Research, 48% of people who responded did not understand how their taxes would be affected in retirement. In fact, most people said that they were paying more in taxes than they expected.
All right, so what are some of the ways you help people learn about existing opportunities to save on taxes in retirement?
Well, Mark, you must have a game plan for your retirement. You want to be as tax efficient as possible. You know, and today we're offering a free in-depth tax analysis for our viewers. And in this tax analysis, we identify opportunities to become efficient against taxes in the future. Now, if you're charity-minded, you want to look at things like QCDs or donor-advised funds, and this will allow you to balance your itemized deduction along with the standard deduction in offsetting years. Now, many times we can identify strategies to reduce thousands of dollars in taxes throughout retirement. You know, we just find that these basic strategies are not being communicated out here by tax professionals and financial advisors today.
And you can contact Brian at the number on your screen for more information. ABC-7 financial contributor Brian Mirau with Mirau Capital Management. As always, thanks for your time.
Mark, thank you for having me today.